Good day, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Tuesday. It's February 8th. It's 7:55 in the morning. The market's going to open up in about an hour and 35 minutes. And as you can see here, we are down for the count. Now, again, the Dow's down 5 or 3 points. It's barely down. The point is anything below 75 or 85 or up 75, 85 is completely random. What I don't like about this trading action is even when we're opening higher, we're drifting lower towards the end of the day, which is not a bullish move, which is a bearish sentiment move. Now, in terms of news today, and I'll get into trading action in a minute, we do have international trades in goods and services and Redbook. Redbook is a private report that gives us same-store sales. So this is a very important retail sales report. And I'm hoping that the number is significant enough to cause consumer discretionary stocks and retail stocks to change direction, because I'm not liking what I'm seeing in the market. And as I said, we'll get into the technical aspect in a minute. We also have international trades in goods and services. This is a big report for global economy in terms of the supply chain. So we'll get a chance to see that as well, but this is not going to be as impactful as the consumer price index. This is the inflationary report on the consumer level, and that's coming out on Thursday. That's the big report for the week, followed by consumer sentiment, which is a rehash of the public report, which is based on retail sales, because this gives us same-store sales. This gives us consumer sentiment, but consumer sentiment is based on retail sales. Consumers make up 2/3 of the economy. So it's not like these two reports are very far off, which I don't understand why they always put consumer sentiment after the Fed data, after the important reports or after the private reports. But again, I'm not the Fed and I don't work for the Fed. And I don't even have much contact these days with people to do. So it wouldn't do any good. Maybe I'll just write a letter and put it in the garbage can, as my wife usually says. Just write a letter. All right, let's talk a little bit about global economy, and then I'll talk about technical action. Global stock market were mostly higher Tuesday as investors watched for signs of whether central banks will try to cool inflation by speeding up withdrawal of economic stimulus that's boosting share price. Now, this is global economy. This is what happened after the stock market closed. We'll get into the U.S. market afterwards. What I'm hoping to do is fill in the gap between what happened when the stock market closed yesterday and before it opens now. Because remember, you got Europe and Asia trading. S&P 500 sank Monday on losses from tech and communication companies. Those companies have been hit really hard, and I'm not seeing any upside. And again, we'll talk about it in a minute when I talk about chart patterns. Markets have been uneasy since the Federal Reserve said in mid-December they're going to withdraw the record low interest rates and accelerate buying the buying bond program to cool inflation. Traders are trying to figure out how stocks will be affected as the Fed carries out its plan to accelerate the withdrawal of stimulus. Investors expect at least 4 rate hikes this year, starting next month. Don't hold your breath. That's what I'm going to say. Investors are waiting for U.S. consumer inflation data on Thursday, which might influence Fed planning. That is what I am looking for very much. I'm looking for the CPI. This is the report to see how much inflationary data is on the consumer level, or how much inflation is hitting and impacting consumers. That's going to be a very powerful report in light of everything that we're seeing now. Now, put the call ratio is kind of in between the zones, but it is kind of going higher. And notice we haven't hit the low level yet, which is telling me that the market still has more upside to go, substantially more upside to go, especially if it hitting these levels right here. This is the zone that tells us the market's overdone to the downside. And anything here is neutral, anything here is overbought. Well, we haven't been overbought in a long time, but we've been oversold for quite some time. So that is going to be, let me just put this little thing here, this little rectangle here. There we go, that level. So as long as we stay near these levels, near this box, the odds are very strong that the market's not going to go much lower. But once we're in here, it's fair game. Now, another thing that I'm really concerned about, and as you will notice, if you look at the SOX, the Philadelphia Semiconductor Index, and if you look at most tech stocks, you will see that they kind of look like this. Also, look at the tech sector right now. Let's take a look at just the broad tech. Look at consumer discretionary here. Hold on, let me Notice they look almost identical. Here is this, and here is the SMH, which is the same thing as the SOX. Look at that. And here's the SOX index. Here's the SOX index, and here is consumer discretionary. I mean, look at that. And here is XLK, technology. They're not looking all that different. They're all hovering around the 200-day moving average. My point is this: if we don't go above the last pivot high, and on the technology, that's the 165 level, we're going to come back down here. That's not good. And on the NASDAQ 100, it's very, very similar. See that little pivot here? Whether that pivot is above or below the 200-day, we need to overcome it. On the NASDAQ 100, that pivot is 370. Till we break that pivot, we're not going much higher. And talking about individual sectors, I want to show you this. Energy doesn't have that issue. Notice, still going higher. And I think energy has till about 100. Consumer staples, they're kind of cooling off, but they don't have much to cool off. I mean, they're not in a major downtrend. They're kind of choppy. And I still am very, very bullish on consumer staples. Financials look like they're starting to come up again because we know interest rates are going higher, which is actually beneficial for financials. Utilities and consumer staples, notice they're kind of on a sit tight and wait mode right now, consolidating. Consolidations usually lead to higher prices. Healthcare also kind of choppy, but look at technology. Downtrend. See, I need to break above this level, the 165 on XLK. If we don't break above this level, this is going to turn into a downtrend and take us lower, which looks like it's going right now that way. Kind of like basic materials. Technology looks like basic materials did before these two bars, right? Notice that? That's what I'm afraid of, that we're going to go back down. And look at communications. It's already there. And consumer discretionary, well, we need to see it break above 187. That's going to be the key. Now, it's interesting because consumer discretionary, and if you look at consumer discretionary, it has been all the way down here. And on a monthly basis, it's all the way down here. But look at the chart of consumer discretionary. It's actually starting to make higher highs. We need to see it go above the 187.80 level. I hope you're writing this down. So if consumer discretionary can break above the, let's say, the 190 level, then I will start becoming bullish again. But until we see these three sectors, or at least these two sectors, which on a 1 month basis have been the weakest, start moving higher, we are not, I repeat, we are not going to be in a good position at all. On a cumulative basis, you're still seeing energy and communication sector. That's the leading sector, and that's the lagging sector. And remember, today's Tuesday. I'm going to give you strongest sector, strongest stock, weakest sector, weakest stock. We always do that. But energy has been leading now for a month and a half, 2 months now. And communication services has been lagging for a while. Let's go back a week. So, yep, same thing. Let's go back another week. Yep, no change. Let's go back another week. No change. We're on January 14th now. Look at this. I love the time back machine. Let's go back another week. Energy, communication services. This is why I keep using my CSI scan. It works. Technology. December 31st, technology was leading. But anything after, that's 26 days. Or no, that's more than 26 days. We're already in February. That's like a month and a half. Energy, communication services. Now, let me show you the SPY. And there's this levels on the SPY too. Don't just think it's not. We got to get above this pivot. If we don't get above this pivot, we're going to be in deep doo-doo. It's 158.37, which is kind of close to the 50-day moving average. And on the Dow, I keep giving you these levels every day because they're really, really important. And on the Dow, that level is 356.42. Now, keep your eye. I'm telling you right now, keep your eye on consumer discretionary. We need to see consumer discretionary rally. I mean, really, really rally above these levels. Now, as I said, it looks like it's going to happen. It looks like it's going to happen, but we need to overcome this bar, which is the 188. What's the high here? 187.53. We need to overcome we need to go to the 158, 159 level, at least. Because right now, although we're building a nice little triangle, consumer discretionary is not looking good. If we can get a rally out of these stocks, then all the retail stocks like Crocs and all the other consumer stocks we've been holding will rally. But we need to see consumer discretionary rally in order for that to happen. If it doesn't rally, no soup. All right. Now, One thing that's working in our favor right now, volatility. It's not really moving all that much higher. As you can see here, the crux of it is gone, which is a bullish sign. It doesn't look like volatility wants to go higher at this point. It looks like it wants to go lower, or at least stay steady. If we don't see a major downdraft in the next few days, we're going to go further down. And that's telling us the market is going to be bullish, bullish and bullish again. Now, let's talk about the strongest stock and the weakest stock. As I showed you, energy is the strongest sector. Communication services is the weakest sector. We go to our S&P 500 scan. Oh, Devon Energy remains the strongest energy stock, like for a month and a half now. So it's DVN, MRO, Halliburton, these three. Take your pick. ConocoPhillips. I like Devon. It's been the strongest one. On the downside, communication, we've got Twitter. It's looking awful right now. We've got Paycom, that's communication right there, and Dish. They're just awful stocks. I mean, just god-awful stocks. And if you want to get into real communication, let's see here. Those are, by the way, this is a Paycom. Those are all tech, communication tech stocks. Let's see, Salesforce. Let's see here. All these consumer stocks, they're just not looking really great right now. Let's see here. No, I wouldn't go all that far. I would just stay with these right here. But Twitter, Meta, Paycom, definitely stocks that you want to keep to the downside right now. Now, tomorrow we're going to talk about a long trade with an option and a stop loss and profit target, and a sell short position, a short position with a profit target, a put, and a stop loss. So don't miss out tomorrow. Now, before I let you go, I want to tell you something very important, something I want you guys to pay attention to. I just put out my second biggest buy alert in the history of my trading career. Oh yeah, it's like that. Folks who have leveraged the proprietary trading rule behind this alert are targeting the strongest stocks. And boy, oh boy, this one could be something special. The markets have been volatile, folks. Yes, it's been really rough out there. But we've been able to hit a win rate of 85% over the last 4 months. And I'm not just giving you the winners. I'm being winners and losers. We've had 85% win rate on closed trades over the last 4 months. Thanks to quick pops like 18% on TSN overnight, 53% on Power in 4 days, 83% on Albemarle in just 6 days. I want you guys to check out my plan. You're going to love it. It's meat and potatoes. There's no fluff. I give you the rules for one of my strategies that's worked for years. You're going to learn a lot. That's the key. I want you guys to be educated so that when it's time to pounce, we're going to be ready. Click the link below and check out my new plan to take advantage of 2022. Tomorrow, one long, one short, actionable trade idea. Follow the link below this video. There's a link I posted in the YouTube channel below this video so you can get in on my 2022 trading plan. Stay out of trouble, be very careful, and be very cautious of going long till you see the consumer stocks trade above, let me give you that level again, above the 187.75 level. And if I'm helping you navigate the markets, let me know. I want to hear from you. Support at marketgeeks.com. It won't cost you anything. And I'll send you a response. Bye guys. Have a great Tuesday. Stay out of trouble, I tell you.